Good morning, everyone. Hey, Johnny, Travis, Badir, how you doing? Just put the link in the room. Hey, Fezro, how you doing? Good morning. Cisco, aloha. Hey, Joe, what's up? Alrighty, there we go. Well, man, it's a slow night in 7-Eleven, I tell you. These wholesalers are making all the money today. Okay. All right. So, hey, Jiraj, how you doing? Ayo, what's up? Overnight inventory once again is long. I'd say about 70, 80% maybe more, as all of the trading is above the close of yesterday. So once again, we had, we had that nice move up, then we had that liquidation into the close, right? As that liquidation into the close happened, the wholesalers, sorry, let me make this a bit bigger. Yeah, I'm chilling today too. No trades yet for me. So these markets, once you actually get to know what what's going on, right? Once you actually understand how markets work, we can basically find out if it's business as usual or if something's different. So tonight is business as usual, okay? And what does that mean, JJ? So that means you had a market go up, we distributed, right, up here, all right? We didn't move the point of control higher, so we weren't up there enough. We couldn't get enough buying over 69.53. So because we couldn't get any buying over 69.53, we had liquidation down. Once we get that liquidation down into the close, the wholesalers are long here, right? Now, when Globex opens, right, we take that inventory, we take a little time to open the market. And remember last night I said look for a backfill of 69.43. So we backfilled 69.43. We found the bid right at that M period low, right? That's where everyone is short. Now, why is everyone trapped short there? Right? Right here. Friday's high. Do you see how the overnight low and Friday's high are an exact match? Now, this is where market profile and a good half-hour candle chart can really, really help you because here's the thing, folks. Do you remember what happened last year? Okay, where's Rod? Where are my guys who keep track of this stuff? Remember last year, the market closed up high, and then the first week or two of January, it sold off. And I think that was the AI sell-off, right? Do you guys remember that? And I told everybody, be careful shorting because nobody's back at work yet. The market sold off in the first couple of weeks in January, and then it just ripped. So I think everybody was looking for the market to sell off again. And when we sold off on Friday, the first day, full day of trading, we came down to 68, 64, but we couldn't take it out. So everybody got short down here, right? And now they're all trapped, right? Up they're trapped right here because they were using Friday's high. Like big traders, what they do is they'll sell a big position short and they'll use that high as their out. And We took that high, which created more buying, right? Because when you take an upper stop, you create buying, right? Right? When you take out an upper stop, you automatically fire off buy orders from the people who have their stops there. When those buy orders get taken, boom, right? That creates buying. And then all the breakout FOMO traders come in, right? It's like having a lineup at a nightclub and put a bunch of pretty girls at the front of the line. Everybody will get in line behind you, right? I used to do this for a living. I was a bouncer before I was a trader, right? So, you know, that's where everybody's trapped short. And yesterday we came down there in M period, right? We came right here. That's M period right here. And then, oh, what a coincidence. The overnight low is right where M period is. So now we know where the bid is. Now, once you know where the bid is, we can work off of it, right? Right now it's really slow, right? So they took this liquidated inventory. Now, the night market is a great way to get rid of that inventory. Now, we've only traded 50,000 contracts. But hey, if you were a wholesaler and you were long 500 contracts here from the close, you could easily dispose of them in the night market. You see? It's a beautiful business. It's a beautiful business. Right? So, okay. Overnight inventory is about, I'd say 80% long. So we're looking for a correction when London opens in 20 minutes. So when the London markets open in 20 minutes, usually you get a move down. When we get that move down, we are going to find the bid, and I'll show you that on the next chart, right? So the first thing is to break 53 quarter and stay under it. If you're a short seller and you're short off of that overnight high, it's not a bad trade. Hey, Charles, good morning. So if you have a break of that overnight high, right, that's going to create more short covering. But if you're short and you have your stop up there, you're looking for this 53 to break, and then these levels here around 40, 49.50, and then under 48 to get tested. So let's go dig in. So now you have a general overall view of what's going on. So we do like this is we call the bird's eye view. Like we're looking at the top of the city from a bird's eye, right? Then we go and we dig in, looking at our market profile. So J period corrected inventory down. K period took out the low of J by one tick, right? Our overnight point of control is right here because that's where we're distributing, right? So this is a simple business, right? Here is where the position was at the end of the day. This is where we're selling it at night for profit. Very simple. So our trade strategy has to evolve around common sense business principles, right? So let's go mark up our stops. And I've got the minute chart coming up in a second here. Here we go. So everything we do is practical. Can I break down who are the players in the business? Glad you asked. Here, let me put a screenshot up here. Let me see. Yeah, so after 35 years of doing this, right, one thing I realized is that most people don't realize or understand who the players are in where they're doing business. Now, a good businessman should understand who runs the big business so you can get into the flow of business, right? So who are because it's slow right now. Let me just bring this over. I hope you guys don't mind. Who are the institutional players in this business, right? So number one, market makers, right? The wholesale element. They buy from us when no one else will buy and sell to us when no one else will sell. They provide liquidity. They pay for their order flow. They get it from your brokerage firm, and larger other traders get them to work orders, right? So traders are sort of the working class guys of the market, right? Some traders leave their firms and they start these proprietary pools. Now, these are large pools of speculative money. Those are the people who are working at night, who have algorithms really now. I mean, it's not human beings so much, but there's somebody awake, right? There's an assistant or one of their young guys, right? They are fast, speculative, they're smart, they have millions of dollars invested in technology. So, Johnny, say you and I worked at Goldman Sachs. We worked there for 7 years. They don't make us a partner. We leave Goldman, right? And we leave on good terms. So we start a little hedge fund with 150, maybe $200 million, maybe 100 million. We take our bonuses, put it together, friends and family, right? And then Goldman will want us to trade with them with their prime brokerage services, and they will go raise money for us. So maybe then we get 400 million under management. Then you get 3 to 4 times leverage. You use 50 to 100 million of that for speculative stuff, which is ES, NQ, oil, gold, all that crazy stuff, right? So they step in when markets are volatile. These cats have been running the market now for the last year because the large global investment money managers like BlackRock, they buy a position and they sit on it for 30 years, right? So BlackRock has $13.5 trillion under management. But between BlackRock and the market makers are these prop trading firms, right? Big and small hedge funds like Point72, Bridgewater, right? Renaissance Tech, Rentech, right? They are the hedge funds. And they have a longer hold of time periods, right? And then, of course, pension funds. California Retirement Pension Fund, CalPERS, the fireman's pension, police officers. That's slow money. And they go with these large money managers. So a lot of their fund management is sort of taken and given to BlackRock, and Vanguard and those large firms. So those are the players. So in our futures markets, what we are doing is we are basically we're dealing with those prop traders and market makers. Does that make sense, Johnny? So the market makers provide liquidity. Now prop traders, so now if you're short, okay, if we break that 69.52 here, right, the people who are long above that level will start coming out, and our next, if you're trading and you're short, right, see how the selling is starting to come in under 52 3/4? The offer is moving lower. That means the people who are trapped up here are starting to sell. The people who own it here will undercut their price. So if we get under use these areas under 51.50, VWAP is down at 49.50. So they're going to front run VWAP unless there's a big sell order, right? No problem. Now one of our friends, RX, he just sold his prop firm for, I don't know, $1.5 billion, right? Well, there was a partnership. I think there were 6 of them or 5 of them. And, they sold that partnership for over $1 billion, right? And, these are the guys who make 30, 40 million a month trading prop. They're very sophisticated. They're all ex-Goldman, ex-Morgan Stanley, JP Morgan prop guys. Like they're highly intelligent, extremely ruthless, and insanely well capitalized. Now their technology too, like they'll spend millions on technology, on, data, right? See, our data feed is what, $50 a month? They spend 200 grand a month on data, right? They'll hire analysts, like they spend huge amounts of money just on infrastructure. So that's why when there's news and stuff like that, they're the ones who capture those trades. That's why you guys should never trade news, right? The way we trade is we always look for a good deal, right? So say if you were short 56, 57, you had your stop above 58, because you can see that there's a seller here, right? The sellers were here, right? And then the seller moved here. See how clear it is on this candle chart. Then the sellers moved down. So then sellers are competing and lowering price because the object of this business is to distribute, right? I was talking to this kid who was getting, one of the kids in my building, really smart guy. He's got an internship at JP Morgan, and I said, listen, it's all about distribution, right? Distribute, 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 right? Sell your inventory, right? If you have to put it on sale, put it on sale. But you have to turn your inventory into cash. These charts, this is a TPO or market profile chart. This is a candle chart. So this chart is like a map of the city, right? And then this here tells us what's going on in this particular neighborhood. So this helps us make good trading decisions. So we don't wander into the wrong part of the city trying to do something silly like shorting the lows or buying the highs, right? This way we have what pilots call situational awareness, right? Situational awareness is knowing where business is being conducted, and that way you get good market intelligence, which you need, right? So you stop doing things like trading just because, gambling, all of that stuff where you lose money. This way you only take trades that fit under the terms and conditions that you do business, right? So for me to put money in this market, I need to see this, this, and this. And then my risk exit is always there. Before I get into the trade, I know where, if it goes bad, I'm out of the trade, right? So when you see little candles like this, right, you can take a short, but you're going to have to hold it for a while. Because when the candles are very small, business is slow, right? So you don't get this, right? You get, and then a move up, and then a move up, right? That kind of chart this is where you have to build positions. This is where you can scalp, right? So knowing when to trade, when not to trade, and then basically we are stalking our setup the way a lion stalks a gazelle, right? We're sitting in the bushes and we're waiting and we're waiting, and when that setup presents itself, we go in for the kill, make our money, and get out, right? You never want to overstay your welcome in the stock market because the longer you stay in, we'll get you on the other side, right? Yeah, it's so this is an inventory correction. London's going to open in 9 minutes and 30 seconds. So when London opens, let's see if we can get down to VWAP, right? We're still distributed. There's still bids here, right? Support in a market is created by unfilled bids, mostly from short sellers because nobody really wants to buy this thing. What time is it? It's 10 to 3 in 10 to 3 in New York, right? The house always wins. That's true, right? They make, it's the house always wins in trading, right? We try and we must be smart. We cannot be greedy, right? Because greedy leads to bad decisions, right? We want to be long-term greedy. Make a little here, make a little there, make a little here. You'll be surprised. You make 500 here, 1,000 here. There's 20 trading days in a month, right? If you make 500 a day, that's an extra 10,000 in revenue. If you make 1,000 a day, that's another 20,000 in revenue. And you could work your way up. We start you on the micro, right? And we then work your way up. You can do this with a CFD broker. I am not a fan of CFDs because they don't have any rules. You're not trading an actual market. You're trading a fake market, which is run by algorithms of the broker. And I have never met anybody who trades CFDs who's long-term made money. The other thing I don't like about CFDs is you can hold a position overnight if you put more money into it, and they let you transfer money from your bank account into your CFD brokerage account instantly. Whereas in a designated futures brokerage firm, you have to do a wire transfer, and that takes a few days. So you have to close bad positions. This encourages people to put money into bad positions, and they end up draining their bank account, right? So if you have discipline, you can do it. But one thing I will tell you, Happy, is once you start making a lot of money in the CFD broker, they will find ways of wiping you out because you're not trading an actual stock exchange. You're not trading a futures exchange. Your order goes into some internal system that they're using that mimics, with quotes, right, you know, the market. So those orders aren't actually going into a real market, right? Oh yeah. I mean, listen, The other thing too about those, a lot of those CFD brokers, they're all based in Malta, Cyprus. Good luck having, and they're not really regulated. There's no regulation. They're not allowed in the U.S., right? Because they're so scammy and dirty. And yeah, I know this because in 2002, some guys came to me, some dudes from where were they from? I shouldn't say the country. Anyway, they were dodgy. They were sketchy dudes, and they wanted me to help them run a CFD firm. And I had a sneaking suspicion that they were laundering money through the firm. So I was like, no, thanks. Right? I turned down the job, and I could have used the job at the time because it was right after 9/11, but I turned it down. And I just stay away from that. If you want to trade futures, there's a bunch of great firms in the US where your order is going to go from your computer into the Chicago Mercantile, which is regulated by the Commodities Futures Trading Commission. There are laws, you're protected, your account's protected, and your order is going into a real exchange which is regulated. With CFDs, spread betting, all of that stuff, it's all fake, right? It's a fake market and they can do anything. I know a lot of people who, like, there's a certain gentleman who's an author who's everybody quotes his book, and I know for a fact that he works with these firms. One of these firms, he recommends that you use them, and then they give you a percentage. They give him a percentage of your losses, right? And everybody respects this guy. I won't say his name, but you know, I happen to know for a fact that he gets a percentage of the money that you lose if he recommends you to this brokerage firm. It's very, very scammy, right? Very scammy. I would always go with if you're going to trade futures, go with a regulated U.S. brokerage firm. Right? It might be, like, we use a bunch of them, right? We have a ton of them. Go to Chicago, at least that way you'll get a fair shake, right? Like you might, you'll lose money if you screw up, of course, but your orders will not get front run, right? If you put in size orders on these CFDs, they'll move the market against you, stop you out, and then it'll go. They're just scammy because your orders are not going into a designated, regulated exchange. I'm going to get into trouble for saying all of this, but hey, listen, I'd rather you guys be safe, right, than get scammed, right? Remember, in financial markets, there's always somebody working a scam, working an angle, right? Right? You know, and there's always somebody who's willing to take your money, right? I know I've sold billions of shares of penny stocks into the US markets over decades. So, there isn't a con or a scam that I haven't seen, right? Right now, there are three guys sitting in a diner somewhere writing on a napkin how they're going to take your money. I bet you anything, right? It's just brutal, right? You know, there are yeah, there's always people who are going to take advantage of you, and my job, my goal is to help you to not be food. Oh, you want to hear my Bernie Madoff story? Okay, check this out. I just started as a trader. Me and my buddy go to the first security traders meeting. It's really slow. Look at these candles. You can't do anything anyway. So my buddy, he's a rich kid. He's a spoiled rich kid. Good guy, but he always says the wrong thing at the wrong time. So we're both rookies. We're at the Security Traders Association meeting. Bernie Madoff is there with a couple of guys from Sharp Capital. So they introduce us, right? Because he's like the godfather of the NASDAQ and well respected. This was, I think, 96 or 97. And, he wasn't really a friendly guy. And my buddy, I'm like, oh, nice to meet you, blah, blah, blah. And he's like, he doesn't, I didn't really say anything. He just kind of grunted, like, oh, I got to shake this kid's hand. Just because I'm standing around, I can't be rude to him, right? And my buddy, out of the blue, turns and looks and goes, hey, where are all the trader groupies? And I was so, and Madoff just turned on his heel and walked away. And I'm like, nice one, and that's my Bernie Madoff story, right? He had a market making firm that we really didn't want to do business with because we always had trade discrepancies with that firm. They never matched trades properly. It was hilarious. So yeah, that was where are the trader groupies? And he just looked like, who let these two clowns into this convention, right? And then he just turned and stormed off. And I looked at my buddy. I went, "Nice one, Spence. You know, nice one." And that kid actually has his own hedge fund now, right? Oh, good, the good old days. No, it wasn't obvious at all. We were rookies. We thought he was the godfather of the Nasdaq, and he was one of the most respected guys on the street. This was '97. He didn't get pinched until later on, right? I think it was the financial crisis when he got pinched. So yeah, it was. Yeah, it turns out he was like the biggest scammer in the world. Anyway, that's my Bernie Madoff story. That was the first and last time I ever met him. Good thing too. Uh, Alrighty. This is like watching paint dry, eh, folks? So, do you guys have any stocks you want to look at, or I don't know? How are the crypto bros doing this morning? Where's the coin of bitterness? Bitcoin is 93,281. Let's see if we can. I don't know. We'll see what Bitcoin does this year. I think it had a little bit of a balance, you know, between 84,000 and 91. It's kind of broken out of that. The next level is 95,500 that I'll be looking at. I don't have an NQ chart. Um, Montreal trader Robert Trade Life. Welcome. Can I just call you Robert? Let me just. Forgive me. Hopefully this doesn't hang up the computer. Let this load. I'll pull up a. Oh, cool. Oh, you just changed your name. Salut. Welcome to the room. I'm assuming you speak French. Let me see. NASDAQ, NASDAQ, NASDAQ. Where is that crazy thing? Oh, here we go. Oh, I haven't even rolled over the symbol. Dear Lord. Oh, here we go. Uh, we have NASDAQ a cost basis here. And that liquidation took us right back to that cost basis. And then we're up again. If we could stay over that 24,927. Let me copy and paste the chart. I'll update this chart. And I'll clean up the TPO charts. Let me just duplicate chart to chart book. There. And I'll go run a TPO chart too. There's NQ. We're at a big distribution balance right now in NQ. Okay, ES. Hey, look. What did I say? There we go. We're going to come down to VWAP. So if you were short, this is where you should be taking some profits. If you're short 55, 56, you want to pay yourself here. If we break VWAP, then we'll be looking at 46.5, which is just down here. There we go. So we tagged VWAP, so now we've got some decent selling. Beautiful, right? London opened, one tick up and then down. London, what is it, 30, 40% of the time trades lower to try and shake the market out and get some cheap inventory. Cheap inventory is always a nice goal because you can grab that cheap inventory and then sell it higher for profit. So let's shake out now all the people who are long over 52, they're not happy and they're all selling. So let's see where we find a bottom. Right now we're under VWAP. I haven't taken a trade this morning yet. I've been talking and so now we're under VWAP. So if we continue to get selling pressure under VWAP, wait for the next candle to open in 20 seconds. If the next candle can't get anywhere near VWAP, see, look, beautiful liquidation, right? See how slow it is? And then all of a sudden London comes in and sells the market down. Once we take out that K low, right? Once we took out that low at 52, all of the people trapped long above it start to puke out, to start to sell out, right? So let's see, right? If you are a larger trader and you're short, you can stay short. And we're looking for 69.46 half. There we go. Beautiful. Beautiful. And that is what we call an inventory correction. Inventory was long. We were looking for shorts. Right? Where'd we come down to? 46 and 3/4. So we stopped one tick short of my level. Not bad. Not bad. Now, the shorts are going to start covering under VWAP, right? Smart. Let's see if we get price stability here. Otherwise, we're going to come back. See, there's the cost basis of yesterday. That's where 70% of the inventory is priced here. We took it, we sold it for profit, and now we put it on sale right back to where we paid for it. Very simple. Very simple. I will use the same cost basis in RTH. What do I want to see to go long? Uh, I'd like a look below and fail of 46, up to 49 where VWAP is. Let's see where they sell into it. What are my thoughts on ES-NQ divergence? I think that is a waste of time. You guys can barely hold on to a couple of things. Trying to look at two markets and trade one of them against the other, you're never going to do well doing that. Concentrate on this, on the traffic of the street that you're trying to cross. Right? A lot of people talk about divergence and correlation, and that's great if you have the skill. Right? The problem with retail traders is their ego overtakes their level of skill. Learn to do one thing simply, right? So I missed that long. I was waiting for a 46.5 look below and fail. Now let's see what happens when this candle closes. Do we close above or below VWAP? Because if it closes above VWAP, we know that there are going to be sellers here and here. There should be some sellers at VWAP. If there's no sellers at VWAP, it means somebody got caught short pretty bad. See, there's the seller. There we go. Come to Papa. See? The top of the candles are where the sellers initiate and start to compete. A trade all the way down to the close, like of yesterday, 43 half, that would be a proper inventory correction. Right? Now, we're going to find the bid. I am not a fan of trying to correlate markets. I have never known a retail trader who can correlate a market and make money. They lose money continuously because their attention span is all over the place. You have to keep trading simple. If you don't keep trading simple, you're going to screw it up because you don't have the skill to correlate. Now, I know guys, I'm on Twitter sometimes with Wolf, and there's guys who correlate markets, but they were floor traders. They've been in the business for 40 years. They could trade this thing with their eyes closed, right? Let them correlate. What are you interested in correlating? Just look for a simple trade, right? Look for a simple way to do business. Don't overcomplicate this. Looking for a 46.5 print. Let's see if I can get one. The offer is up. The bid is not following. Offer up. Bid's not following. Looking for 46.5. Look how slow it is all of a sudden. Once a market comes right back to cost basis and it's mechanical slow trading, it'll stop. And these algos are so amazingly precise, it'll stop on a dime. Look at the offer lift. I'm still waiting for a 46.5 print. There we go. Finally, I feel relieved. Let's wait for the next candle to open and see what it does. See how the highs of these candles are continually lower? That means the market is on sale, on sale. Sellers are lowering price because they ran out of buyers here, they ran out of buyers here, and now remember they have inventory. They need to sell their inventory. So let's see where we come in and find the bid. Now let the market find the bid. Let the billionaires, those guys that I talked about, those big prop traders, let them find the bid for you. When we find the bid, then we can execute, right? So that's our cost basis. You double it to the upside, you double it to the downside. These are the discount zones, right? So right now, there's no reason to go long right now, right? Usually what happens to us is we'll go long here, or we'll try and go long, we'll miss it, we'll go long here and then get stopped out, right? So let the market sell off, just relax. Let's see if we can take out 45 quarter. That's where the point of control is from yesterday. That's where 70% of the inventory is priced, right? So if you know where the inventory is priced and you see the order flow, right, and the speed of the tape, right, we're looking at market structure and the order flow. How does the market structure react to the order flow? The order flow tells us, there we go, that's what we're looking for, right? Bring it down, bring it all the way down. I want to buy, I want a good discount when I'm buying, right? I don't want to pay retail. You guys get what I'm saying? That's why we use these zones. First of all, they give us great targets because they're insanely accurate. Then they tell us where the inventory is priced. So do you want to short something when it's at cost basis, where everyone's buying it, where the wholesalers are buying it? No, you want to short when you see the back end of a move, right? And if you're looking for a long, let them clean this up, right? You could buy it now and put your stop under the close if you're feeling froggy, and you might be right. I'll like to wait before it comes up over 46 half 47 because then you've cleared out all the suckers, right? All the suckers try and buy the absolute low, right? There's a little front running of the close. Let's see if we can tag the close. What do I mean back end? Okay, my friend. I'm glad you asked. When you look at a chart, There's the front end of a move and a back end of the move. Here, this is the front end of the move. This is the back end of the move. You want to short when you see the sellers coming in. You see? This is not what you want to short. You don't want to short this. This is what suckers a lot of people. That move is so the wholesalers who are long here can get rid of their inventory. Once they run out of buyers and start lowering price, you always want to short. This is the front end. This is the back end. You always want to short the back end of the move. Why? Because you've identified that there are sellers. What is the point of shorting a market if nobody's selling it? Ooh, it's too high. Well, who cares if it's too high? Is there a seller? Right? So, right? That's the thing. This is the front end. This is the back end. So once you see the sellers competing and lowering the offer, here you got your stop. So, this stupid thing here. Right? So front end, back end, you have a place to put your stops. Right? And then you can put your buy orders down there. There you go, Howard. Beautiful, beautiful. Way to get in there, steal a little money, and get out, right? That's our motto for the year. Take what you can and give nothing back. There, we've corrected inventory now. We've tagged the close. Let's see if we can, now, let's see if that bid, those guys that were covering short from Friday's high, let's see if the bids are there, right? So now look for a look below and fail of 40, right? That's a good discount if you want to go long. Let's see how it reacts when we get to that 40 stop, which is the V low. See, if you had bought it off of the front run of the close, you'd be stopped out right now. Always let a market sell off. It's like when a knife falls off a countertop. Let the knife fall, let it bounce around on the ground a bit. Once it stops bouncing, then go pick it up. Right? Don't ever try and catch a knife in midair because nothing good is going to happen. You're just going to get cut. So if you want to take a decent front run trade, you'll be buying this. I prefer to have it go break the overnight low, find the bid, come back up, then buy it because then I know that this area has been cleaned out. Markets do need to clean. Right? Let them find the bid. You guys understand what I'm saying? Beautiful London liquidation. There we go. See, there's the break, right? That's why you don't want to front run a level. Front running is great if you have a $100 million account because you can afford to be wrong 5 grand, 10 grand here, and then trade your way out of it. But if you don't have a couple of $100 million in your account, don't try and pretend to be an institutional trader. It ain't going to work. Just be humble, wait for your setup, and when it comes, take it. So the next lower level is 69.34 and 3/4, right? Let's see if we do a look below and fail of 40. We're right at the bottom of yesterday's cost basis here. So let's see what happens. I won't buy it until it comes back up over 40. ETH, my friend, is 6 p.m. Eastern Time to 9:30 a.m. Eastern Time. RTH is 9:30 a.m. to 5 p.m. That's a good inventory correction. What did I tell you guys yesterday and on Sunday? What did I tell you guys? I told you that it's going to be a speculator's market until the large money managers come back to work and start putting together positions. It's Tuesday, right? So those guys that I spoke about, those spec traders, the highly capitalized, very smart people, this is where, they would have been building a short position up here, right? And then as soon as that short position starts to work, they'll start covering, right? Now, let's see if we get a look below and fail of 41, right? Make this bigger. We know that there's going to be sellers there. There's a little gap right there between the candles, so there was nothing in the order book to transact. So if we're going long, say 41, right? Say you're long 41, 41 and a quarter, right? You put some sell orders out, right? Put some sell orders out because see, there's going to be a seller right here. If we take out that seller, the next seller is going to be there. See how there was a seller? They came in. It's going to be a little slow. Not everyone's going to buy at the same time. The shorts start to cover. And once that short bid is established, the wholesale longs will come in and start building a position on top of the smart money shorts. Right? Smart money shorts, wholesale longs, then retail. And then if we get enough people trapped short here, then we'll do this. So just chill and wait. Right? It's going to take some time to clean out that 40. Let's see who comes in to do business. Okay? See, there's a seller at 40 and a half. Right? Because every time the red line, the offer gets up there, ideally, we'd like that point of control to move down from 53s down here to the 41, 42 area. Now, I would wait until we clear 41, right? You see there's a seller right there. Just be patient. Sometimes you'll miss the trade. Who cares? There's always going to be another one, right? Trades are like buses. There's always going to be another bus, right? So let them clean this area out. Don't be too anxious to jump in, right? You can see that there's a seller under 41 right now. Don't go long. Don't go long until that 41 seller is cleaned out. Because what could happen here is another large seller could come and knock it down to 37, 35 in a second. So let the large traders pay the bill here. Do you guys get it? Does that make sense? Right? And my analogy is you go to dinner to some fancy restaurant with a friend of yours. He's just made, say, $20 million on a deal, right? There you go. There you go. There's signs of life. See, there's that seller is starting to lift because the buyers are coming in, right? You go to that dinner, the bill comes, it's $5,000 for dinner. Don't reach for your wallet, okay? Let the large traders clean this area out, and that is one of the hardest things for people to understand. So if you are long 40, 41 here, you want to put a sell order out at 42 if you're buying a couple of contracts to see if that sell order can get executed. If it can't, get out of the trade. Right? Watch the candles. Watch the low of this candle. Can it hold 40 and a quarter? It's slow and choppy, so it might come back underneath it a few times and go back up. It might take some time to clean it. So just be patient and watch. The more you watch this price action, the more you will understand how the business works. The more you understand how the business works, the better your trading will be because you will not be making bad business decisions. Get it? You can see that there's an obvious seller at 40, 40 and a quarter now. There is no reason for you to be long. Let the large traders work this out. It could break that candle and go lower. I just told you, Montreal trader, you got to wait until it clears 41 and the offers start to lift. Now, because you're new, it's something that you're not used to seeing. See, I told you this would happen, didn't I? There's 37. That's why you don't go long when it's choppy and they're doing business, right? I told you because you could see that there was a seller here and then the seller moved down on that spike up to here. Do you see? And then the seller moved down from there to here. See? Real simple. So when this market, it's going to do a flush now, right? And it's going to flush out all the suckers who are long here, right? All the suckers who are long here, it's going to go take them, put their head in the toilet, get their money, and then come back up and do this later on. But we got to clean out all these, right? All these people. Got to shake the tree, right? Next stop is 35. That's why I said 34, 35. Does that make sense, Montreal Trader? The longer you were with us, first you got to train your eye to see it. Then you got to put together your execution plan, right? And that's what I do in my one-on-one coaching is I teach you guys how to do this over and over and over again. So you understand when to take a trade, when to wait. You know, of course, sometimes you'll get stopped out. If you had gone long here and not sold here, you would have gotten stopped out, right? And that happens. That's why we have risk management. You know, you're not going to be right all the time. So let's wait and see if the market finds a bid somewhere here, right? The Big Lebowski, that was a good movie. Is this something fractal you can translate to the HTF as well? That is some grade A smart guy gibberish. I have no idea what you're talking about, my friend. I just have no idea. You could have been speaking Swahili to me. I have no idea what that means. It's just a simple business. You got some inventory? The inventory's on sale right now. Sorry, I don't mean to be rude, but I just don't understand what that means. And HTF meaning higher time frame. Yeah, I don't know, man. I don't know. Just, you know, you've been on my stream, you know I don't talk gibberish. And I don't really, I don't bullshit. So I have no idea. Of course it works on higher time frames, right? The look below and fail is, you know, if you know anything about business, right? When supply runs out, price goes up. So of course this works on higher time frames. I don't know what a fractal is. I think a fraggle is like a Muppet. Wasn't there a Fraggle Rock thing? I don't know. But get rid of the gibberish. Get a trading pattern. Get a trading execution business plan. You'll do yourself much better, right? When the market finds the bid, they'll stop selling. Pretty simple. Works on every time frame. Let me show you. While we work out the low, right? If you had done, here's a look below and fail. Here's a look below and fail of 67.88. So my larger traders, like RX, would have been building a long position here, using this as their out. Maybe buy 5,000 contracts here and sell them on the way up. Works like a charm. But you probably want to learn how to do it on a 1-minute chart first so you understand the business and you know how to trade and that kind of thing before you start putting billions to work, right? Very simple. When supply runs out, price goes up. You grab some supply and sell into the up move, which is created by a lack of supply. If you overcomplicate it any more than that, it is the most foolish thing I've ever seen, and that's why 99% of traders don't make money. Because they're always looking at this really fancy bullshit gibberish terms, and there's no trading, there's no execution plan around it. So cut all that stuff out, find the bid, work off the bid. Now the large traders who are short, they'll short the market down to the bid, cover, and then go long. Right? That's been going on for 1,000 years. Right? That's the way it's always worked. You short down, we're finding the bid. We're still right now in price exploration. Let them, right? You don't want to be the first guy in a rocket, right? You want to be the first guy in a rocket that goes up and explodes? No. Let other people go, let the technology get real, and figure it out. Let other people pay the money. There are people with billions of dollars who are trading right now. Let them pave the way for you, right? You don't have to be first, right? You don't have to get the top or the bottom. There's enough money to be made, right? We seem to be getting some price stability here right before that stop. You'll notice the overnight low came one tick to that low here, right? This is just an inventory correction. That's all it is. That's all it is. Inventory was long. It's a speculative market. We're still inside yesterday's range. If we break yesterday's range, then we'll be looking for, 31 and then 27. But right now, we get a little bit of volume coming in, right? That's the short covering, right? Do I buy this? No, no. Let them figure this out. I'll take the trade when we come back up over 40 and we cleaned out all of this junk, right? Take your time, relax, right? Remember, it's the 6th of January. So there's no reason for you to be, jumping on a trade. Just chill. You know what I mean, friends? Just chill. Right? Let them bake the cake. Right? Don't reach into the oven before the cake is ready. Right? Nice, simple. Right? Let them work out the low. Was it the Globex high yesterday, Moran? Thank you. Right? Thanks for translating, Badir. Yeah, I like to use simple analogies like real life things because when you talk about things like delta divergence and fractals and upside down hanging bat stuff, it doesn't help anybody. Or it's all just BS, right? All of that stuff, all of these people, like, I remember there was a bunch, oh, we got a poor low, right? So there's competitive buying at 35, right? There's some competitive buying at 35. I would love for this to happen. A break of yesterday's low and then back up. That's a trade I would take. If we break yesterday's low, I'd come back up. I'd go long 33.5 against 32 and then sell into the 36s and 37s. But that's not happening right now. Oh, there it is. Ha ha. Beautiful. Now let's see if we get follow through selling. We might. There you go, right? Just let them work this out. There's no reason for you to spend your hard-earned money on some crazy cockamamie scheme, right? You want to do smart business. Let's see if we hold, right? Now, if you're a gun to your head trader who's got a gun to your head and you're long, well, that's your stop. But I would wait. Wait till it reclaims the open of yesterday at least, right? Just chill out. I think I'm done, right? Yeah. Okay, I'm done. Thank you very much for being with us, folks. I really appreciate the time that you spend with us. Please come visit us at the Trading Syndicate if you want to learn how to make money, right? It is the cheapest trading room that has its own AI, right? We like to teach regular people how to make a living, right? We don't talk about crazy BS stuff. We give you real world information that you can use to actually make a dollar. And I am taking on mentoring students. If you are interested, reach out to me. I'm vwaptrader1 on X, vwaptrader1@gmail.com. Please reach out if you are interested in some mentoring. I'd be happy to do a session with you and see how we can improve your trading. My mentoring is lifetime, so you pay one fee and it's for life. So thank you very much. Trade safe. We'll see you at 9 o'clock Eastern. And as always, don't take candy from strange market makers. Thank you, everyone. Have a wonderful morning. Bye for now.